Assalamualaikum warahmatullahi wabarakatuh. My name is Alia Batrisha bint Adinan, metric number 281549. I will be presenting about country background, Germany. First, history of Germany. The region that is now known as Germany was split into hundreds of states, many of them quite small, including duchies, principalities, free cities, states, foremost for the 2 millennia that Central Europe has been inhabited by German-speaking people such as the Eastern Franks. The largest of these states, such as Prussia and Austria, contended for supremacy throughout the course of the following 2 centuries. For a unified Germany that will bring with it consistent laws and a common currency, and that will be replaced the ghastly absolutism of little German states with the democracy, academics, bureaucrats, students, journalists, and businesses campaign. A conservative Prussian nobleman, Otto von Bismarck, was responsible for bringing about unification instead of revolutionary or liberal forces. Sensing the strength of nationalism, Bismarck tried to harness it for his own ends. In 1919, the Treaty of Versailles, a piece of agreement negotiated by the war's winners such as Britain, France, and the United States, applied harsh sanctions against Germany, including the loss of land, payment, reparation, and a reduced military. It was constituted in 1919 until 1933 with a constitution that called for a parliamentary democracy. But in the end, the Weimar Republic that let down those who anticipated it will bring democracy to Germany. The Weimar Republic saw a brief reprieve from 1924 to 1929 due to a small economic improvement. Leading conservative lawmakers established a new administration in January 1933, with Hitler standing as Chancellor. After the Second World War, Germany split into 2 states. One is East Germany, was never truly recognized as legitimate by its people. Moreover, the other one is West Germany, was a spectacular success. Next is the overview environment of Germany. First, political environment. Germany will have election every 4 years. Voters must be 18 years old while teenagers must be 16 years old. Referencing the basic law, a hybrid electoral system with the elements of plurality and proportionality was developed. To be represented, a party must win at least 3 constituencies or 5% of the national vote. Second is economic environment. Germany is the European Union member state with the greatest economy and population. Besides that, this country also known as the largest trade country and global economies based on European Union gateway. It also focuses on innovation in export activities worldwide, as many enterprises still adopting this level. In conclusion, increasing efficiency will be essential for German banks to thrive in the next few years. Third is social environment. Germany is known as one greatest and convenient places in the world to live due to well advanced development and infrastructure and basic needs such as education, health facilities, and many more. The social lifestyle in Germany contains some main principles such as privacy, punctuality, dedication, perfectionism, and many more. Next is SWOT analysis of German country. First is strength. Stable political conditions. It has much lower levels of corruption compared to the other European government, and its contemporary democratic method of decision making is largely supported. Second is positive reputation. Third is competitive workforce. And last is high-level infrastructure and facilities. Second is weakness. High labor costs. This country pay minimum around 1,500 euros per month, which is considered high when compared with other European countries. Opportunities. Renewable energy strategies. Germany already have a good reliability on fossil fuels, and it helps to lower costs and to protect the environment by staying at the forefront of sustainable energy generation. Second is Europe leaders. Trades. Eurozone crisis. This country is affected by political and economic changes at regional because act as one of the European Union, and there is a high possibility to suffer catastrophic loss if any decision not in favor. Thank you. I will pass to the next presenter.
Hi everyone, my name is Feng Junwei and my metric number is 281708. So right now we're talking about the structure of Germany's financial system. The entire financial system of Germany can be characterized by a great level of stability in previous decades. The three most significant aspects of it were the dominance of banks over the whole financial sector, the significant contribution of banks that were not solely focused on profits to the banking industry, and the corporate governance system emphasis on stakeholders and insider control. In fact, the financial system of Germany has been known as one of the systems that already reached international standards. The financial system of Germany's shocking degree of institutional stability is likely due to a large part to their bank dominance and stakeholder orientation, which are known as their fundamental components of their financial system. Next, I'll be talking about the roles of Germany's financial system. So, in Germany's financial system is divided into two sectors. One of the sectors is their financial sector, and the other sector is known as non-financial or real sector units. So, Germany's financial sector, it's known as where the organizations such as financial institutions, banks, and investment funds that mainly focuses on providing lending and other relevant financial services to sectors of Germany's economy to ensure their stability of their economic system. This at the same time as well, their capital markets will contribute to investment and trading and much more. Next, moving on to the non-financial sector. So their non-financial sector's role is to make the financial services provided by their financial sector, and also how they describe the financial systems, which includes both supply and demand. Well, this definition, it means that Germany's financial system also includes financial decisions and actions that do not have an impact on their financial sector, such as household savings and company dividend policy in the form of building up real estate. Okay, so now I will explain about the classification of Germany's financial system. So, Germany's financial system is divided into two classifications. The first classification is bank-based, and the second one is capital market-based. So, both of these classifications are separated, but they are normally a typical classification of financial system in Germany. So, their system that based on banks, which is the bank-based. The banks plays a vital role in encouraging the household savings, which involve governments and other entities or organizations, and generally have a significant impact on other aspects of the financial industry, such as stock exchanges and also investment firms. Moreover, banks in Germany are normally universal banks, and bank funding is very important when it comes to the terms in both volume and duration. However, the complete opposite can be said if a financial system is based on capital markets. Well, this is because as a venue for households to invest their savings, a source of company finance, and also markets for corporate control, capital markets are very crucial, especially in Germany. While considering both volume and loan maturities, bank lending is somewhat constrained, even where universal banking is permitted. As it is now applied in majority of the developed countries, the banks are generally specialized either by tradition or law. The investment and commercial banking activities are typically kept apart. Well, non-bank financial intermediaries plays a really significant role in the capital market-based financial system and also in the stock market, as they will invest in a sizable portion of their assets. Most European nations have historically have bank-based financial system, while Anglo-Saxon nations have capital market-based financial system. Finally, I will be talking about the importance of banks in Germany's financial system. So, the bank's dominance in the financial system of Germany is still considered as one of the surprising and promising systems for a very long time. The primary players in the financial industry were banks, as they provided the majority of enterprises' external financing and also attracted a sizable portion of household savings. Besides that, the big private universal studios have been a vital part in the huge corporate governance since the turn of the 20th century. Their dominance was also based on three elements in addition to their ability to lend money, such as blocks of shares, depository voting rights, and the supervisory board's position in other firms. And that's all from me. Thank you.
Hi everyone, my name is Nur Syuhada binti Muhammad Saidi and my metric number is 281437. Now I will present the structure of Germany banking system. As an introduction, Germany has one of the largest banking system and also modern banking sector rather than other emerging country in the world, but it is considered as overbanked. As evident reported in the global news, Germany banks dominate the whole financial system but have a low profit margins because of the high demand on credits in Germany. However, the advantage of this banking system is that clients benefit from reduced interest rate and lower banking costs, resulting in greater deposit rates. The Deutsche Bundesbank is Germany's central bank. Their main purpose are focusing on preserving price stability, regulating the financial and monetary system, banking supervision, cash management, and so on. German bank profitability is under increasing pressure because of rising compliance costs, high cost structure, and ultra-low interest rate due to new rules and regulation, also highly supervision by the central bank and financial authorities. There are only a few large centralized banks in Germany, while the majority of banks are smaller in a regional structure. As of 2022, there are 371 financial institutions altogether, including with the banks in Germany, 421 local banks, and 987 local cooperative banks. Now, we move to the banking system structure. Germany banking system is dominated by universal banks, which are allowed to participate in a wide variety of financial operations, while specialized bank accounts can operate their operation for barely 3% of all banks in Germany and are largely formed of mortgage banks, building association, and investment businesses. The number of banks has decreased by almost 45% over the last 2 decades, from 4,468 banks in the year 1989 to 1,981 listed banks in Germany in 2008, and decreased more to 1,445 listed banks in 2021. Germany banking system is structured in 3-pillar system. The first one is private commercial bank, where the bank considered as strong and huge bank in terms of the bank balance sheet, but their market share of overall volume is not large. Example of commercial private bank are Deutsche Bank, Commerzbank, and Dresdner Bank. According to the equity ranking, Deutsche Bank is the top German bank in terms of asset, and it also rated number 16 worldwide. There are 2 categories of private commercial bank, which are regional bank that provide banking service in particular region, and second, foreign bank that own branch office in foreign country or they open foreign bank branch in Germany. Second, loan and saving association. They are the bank that are publicly owned Because this bank give loan to middle class and upper class customers. They are also known as middle class bank. Landesbanken or regional financial association are often in charge of lending to big clients in a certain federal state. Sparkassen or local saving banks are the traditional core group in banking institutions where they focus on serving local customers for decades. Local saving banks have been the market leaders in giving loan to private people, primarily on giving mortgage loan, lending money to small and medium-sized businesses, and mobilizing local deposits. Lastly, the third pillar system is the cooperative bank that are the main financial institution owned by their customer, and the earnings from their product and services are given as dividend to the bank's member. The cooperative institution function primarily on regional principles.
A very good day, everyone. My name is Purvanesh Analaki Ganesan and my metric number is 278733. In this video presentation, I would like to present about the pros and cons for the possibilities of the Malaysian banks to penetrate the market. There are a total of 5 advantages and 5 disadvantages that we presented in our group assignment. But in this video presentation, I'm going to focus on 3 advantages and 3 disadvantages. Firstly, the penetration strategy helps to enhance the access of Malaysia into international capital. The collaboration of Malaysia and international banks can increase the expectation and interest of customers towards financial services provided by the domestic banks. With that, many people willing to make any type of financial transactions with banks such as apply for loans and save funds in their accounts. In depth, when customers apply for more loans means they will have more money to make investment. When the number of investments increase, the overall gross domestic product, the GDP produced by Malaysia also can be increased. With that, the job opportunities available also can be escalated. The entrance of foreign banks products at convenient prices helps our country to achieve greater economic success. The penetration strategy can enhance the availability and quality of banking products in Malaysia. The combination of Malaysia and other foreign countries such as Germany can improve the standard quality of offering financial products and services. The element of innovation can be included when it comes to delivering the products. It is because domestic banks can serve the customized customers to ensure the needs and wants well fulfilled, and it is very important to understand the interchangeable needs and wants of consumers to provide a variety of banking products. The value of taggability and assurance are significant to ensure the offer banking products and services obtain trust from consumers. This strategy really focuses on customer-oriented strategy to ensure the customer's needs and wants are well fulfilled as expected. With that, many banking products are provided at high standard to all types of customers to maintain the growth of the overall financial industry. Furthermore, it also helps to improve the ratings of auditors and agencies of Malaysia. This strategy can increase the sharing of knowledge and equipment between each other. The auditors and agencies can learn new perspectives of banking ideas and innovations to implement in the country. The standard of auditors and agencies can reach great heights and can be well recognized by other countries as well. The quality of decision making related to banking regulation also can be well suited with a realistic banking environment. On the other side, the auditors and agencies can develop their abilities and skills to strengthen our banking industry. Next, I would like to present about the disadvantages of market penetration. Firstly, local banks in Malaysia can suffer from competitive pressures from foreign banks' banking products and services. This pressure can result in massive loss for the market share of domestic banks with various consequences. In the long-term period, the foreign banks start to dominate the market, and with that, indigenous banks have a mountain to climb to retain the market position and to compete at a high level of foreign banking products and services. If they fail, the domestic banks may run out of markets. If foreign banks are considered as more consistent than the domestic institutions, the foreign banks will attract more credit-worthy customers, and again, the local banks in a precarious position which force them to lending to uncredit-worthy borrowers. Secondly, this strategy reduces the profitability of Malaysian banks, especially for local banking products. The penetration strategy reduces the domestic banks' non-interest income such as transaction fees, annual fees, insufficient funds, and many more. It is due to the fact that as foreign banks' products provide great offers and promotion, it can attract more local customers towards them. As this happens, the domestic banks start to lose their base customers. When the number of customers or depositors reduce, means the amount of deposit taking become less. Thus, the loan activity of local banking products become less and end up in not generating loans and not obtaining profit from their loan financing and major banking products. When local banks obtain low profit with high fixed costs, the number of local bank branches can decrease and some may stop operating as the demand from local people become less. If the major financial institutions fail, a high possibility financial crisis may occur domestically, which impacts the overall economic system of Malaysia. Furthermore, the exchange rate of Malaysia can be more volatile. When this strategy was implemented, it involved large amount of investment from both countries to ensure the effectiveness of the strategy to reach the customers. Apart from that, there are also other hidden costs such as research and development costs, equipment maintenance costs, and many more. With that, Malaysia needs to use more currency of Ringgit Malaysia for investment and other relevant costs to other foreign countries. And as this happens, the value of currency of Ringgit Malaysia can be inconsistent and may destabilize the economic growth of Malaysia. When the exchange rate is too volatile, the income of Malaysia can become less. Thus, the government of Malaysia may run out of sources to spend for the development and infrastructure spending for the community of Malaysia. With that, community of Malaysia standard of living can become less, which in turn causes the economic distress or economic issues in Malaysia, such as inflation and unemployment.
A very good day everyone, my name is Yuharshi Prem Ganesh and my metric number is 280691. In this video presentation, I would like to present about the risk and challenges of market penetration for Malaysian banks. In our group assignment, there were 7 types of risk and 5 challenges of market penetrations for Malaysian banks. But in this video, I would like to focus on 4 risks and 4 challenges only. Pointing the first risk faced by the Malaysian community as customers to international banking products is credit risk. This risk is defined as uncertainty from the borrower unable to repay the loan amount and default to the payment to the bank. This risk simply occurs when the funds are extended or exposed to actual contractual agreements. Generally, the interest rates charged towards international banking are high compared to the domestic products. The consumers from Malaysia may challenge to fulfill the obligations to the bank and quite possibly can become bankrupt due to inability to pay off interest or kind of charges or fees. When this happens for a long time, it means customers and bankers end up facing too much financial distress due to dominance of foreign banking products. Secondly, the interest rate risk is defined as uncertainty that affects the bank's asset and properties of banks, which directly influence the profitability level of banks. The economic perspective focuses on the Malaysian bank's value in today's interest rate environment and its sensitivity to changes in interest rates compared to foreign banks such as the bank in Germany. The collaboration can affect the interest rates such as inconsistent, and this can reflect on the profitability of banks. It is because the new relationship to explore new strategies also can go wrong and domestic banks find difficulties to adopt with interchangeable interest rates in the market. Next, liquidity risk is defined as the bank's inability to manage or handle enough liquid cash to run their daily business activities. The foreign banking products require more secondary services rather than primary services due to some complications. So the domestic banks need to make more investments such as human resources and other necessary facilities to ensure the foreign banking products fulfill the needs and wants of the customers. It requires more funds used up by domestic banks, and if the banks are not ready, means they will find challenges to maintain their operating costs such as documentation, processing, equipment and other machinery. Some domestic banks were forced to stop their operations due to inability to cope with fixed costs and others. On the other hand, compliance risk is defined as uncertainty that is related to banking law, regulations, ethics and practices. The banking law and regulations can vary for Malaysia and foreign countries, and if this strategy is implemented, it means some mismanagement and miscommunication may occur between two countries. There is a high possibility to threaten the domestic bank's competitive position and capacity to run their business, and most badly it leads to catastrophic loss when elements of fraud occur during the implementation of this strategy. For the first challenge, it is a highly competitive market with fierce competition where domestic banks must determine how to differentiate the company and product or how to engage in the market to have great engagement to maintain their position in their market. This helps to identify their main competitors to keep up pace with market demands and leads. The collaboration is a key point here where Malaysia to ensure their strategic alliance with the right partner to bring success. Working with the right partners will help the Malaysian banks to build traction and gain credibility to focus on where banks add value and also act as a business partner where the greatest value can be found. On the other hand, Malaysian banks faces challenges due to cultural changes. It is also necessary to think culturally because every market will expect the banks to communicate with them in a different way, and this can be the most difficult part of expanding into new markets. The media acquisition will take longer because it makes certain that you have a strong customer base and success stories that are relevant to the market. The more insight others can gain from your clients and other businesses, the more valuable your content will be to the media to maximize the impact and investment of the public relation campaign. In today's changing economy, the main challenge is the domestic banks unwilling to adopt to new market opportunities despite effective penetration strategy, and these banks must look beyond providing a multi-channel service platforms. Most of the domestic banks can enhance the efficiency and effectiveness of banking system and to build consistent customer relationship that easily due to different visionary and perception for domestic banks compared to international banks. Banks are now focusing more on product design, technological advancement, expansion, recruitment, and so on, while delegating services and quality of services offered for customer satisfaction. Therefore, it is impossible to improve the effectiveness and efficiency of the financial system without a well-integrated institutional and policy framework that can ensure macroeconomic stability, competitive financial market functioning, operational autonomy of the various financial institutions, efficient and innovative management of the system's constituent units, and the establishment of a sound framework for prudential regulation and system supervision. Interest rate and exchange rate policies, no matter how sound, cannot improve system functioning unless they are part of the institutional and policy framework. Last but not least, it's a systematic risk, which is defined as a risk that can be eliminated, and here is the big problem of the domestic bank to cope with any market condition to survive in the market. The inability of domestic banks to understand and evaluate the market demand may cause financial and non-financial distress to banks. Somehow, developing friendly methods for evaluating and assessing the risk are crucial at an international level to maintain market position in the market and to stay competitive in all stages of the market. So that's all from me.